All right, so I will start again. So this is supposed to be a refinement class for the FU. Initially, what we were looking to do was to trade off every single high and low that market grabs or sweeps. So I noticed sometimes it was giving lots and lots of false setups. Market just grabs a high and then gives out a false setup. It fails, and then another one, and then another one, and then another one. Maybe you might even have four losses in a row or so. So I decided to work on it. I think I posted on the group that should be a month ago when I said I want to start working on FU refinement after I completed the one on inside bar. So I said, let me work on this FU because for me too, I was getting series of losses. So I decided to start working on it. And I came up with something. It's just a simple tweak to what we were doing before. Just small tweak. Just something very, very small. And that's something that is very small. Is I was working on how to find um what's it called? Liquidity that is valid. Because what we are trading is a valid liquidity. So I came up with just two. Yeah, there are still highs and lows, but this really increased the win rates like by a lot. It increased this really increased the win rates by a lot. Like when I mean a lot, I mean by a lot. I was showing to someone yesterday about it and he was like, wow, that I should have found this a long time ago or something like that. So that is basically what we are going to be doing today. And I hope you guys implement it and then see how it goes. So I'm going to jump right into my trading view and show you guys. So I'm going to present. You can see the screen, right? Please, if you guys can see my screen, you let me know. If there's anyone who can see the screen, let me okay. So here is the thing. This was backtest. I just backtested it. I backtested it on Euro USD on gold. I shared the one on gold to the group yesterday. I think I did. I shared this one yesterday in the group when I said that FU have been refined. I shared it yesterday. And then I did it on GBP USD. It gave me this sorry, Euro USD gave me the same results. And now I'm doing it on GBP USD, same results. So I'm going to explain the science behind all these trades. It's very simple. And then after that, we are going to check how I got entries on all of them. I'll be using replay mode. I'll put it out here and explain everything. Cut it out here, explain everything until I don't know how far back we can go because I started it from the 1st of August. Right here, this was August. From the 1st of August down to the present day, you can count how many trades it is. That's almost like 2 months or so. 2 months, or let's just call it 3 months. One, two, three, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13, 14, 15, 16, 17, 18. That's like 18 trades in the space of 3 months. In one pair, that's like six per pair. So if we are going to work with three pairs or four or five, that would be like if it's three, it's like 18 trades in a month. If it's four, six times four, that should be 24. Yes. If it's 5, 6 times 5, that should be 30. So that depends on you. But this was just one pair, and everything is very, very simple and straightforward. I don't know why people are joining this class now, but everything is simple and straightforward. So here's the thing. Here's just a simple tweak to everything we've been doing. Now, there are two forms of liquidity we'll be dealing with. Just two. The first one is just the normal liquidity. If it's not this, then we are not doing anything else. This is the first one, which basically means that we are dealing with equal highs. Equal highs could be double top, triple top, whatever it is, but equal highs liquidity. This is the first one. If it's not equal highs, then it has to be the next one. The next one is actually the most important one, and which is what I want to draw. This is not what I came to teach. This one right here is not what I came to teach. It's just something everyone knows, but I just decided to include it to remind you guys that this is a very valid form of liquidity. So equal highs should be added to your list. If it's not equal highs, then it has to be this one I want to talk about. If it's not two of them, then forget about it. Forget about that pair and go to another one. So, but this is not what I'm here to teach. This is what I'm here to teach right now. Now, supposing we have something like this, and then something like this, and then we have this, we have this, and then we have this, and then we have this. So let me just leave it like this. This is a market structure. Now this is liquidity. This is liquidity. This is liquidity. This is liquidity also. So how do we determine which one we should wait for price to grab and which one we should not pay attention to? Now it's very very simple. Very very simple tweak to everything we've been doing before. So I'll put this something like this. I'll put it like this and I'm going to label it. I was backtesting and then I discovered all this and it really really increased the win rate. I've been practicing it for some time now, for like almost a month or so. So the only tweak to this thing is just what I'm labeling now, FVG, FVG, and FVG, FVG. Very simple. Now what this means is that every single high and low formed inside a fair value gap. When I mean fair value gap is there are three candles involved in a fair value gap. The first one, the second one, and then the third one. Let's say a high is formed inside the fair value gap. When I mean inside the fair value gap is the high can completely close, like fill the fair value gap, as long as it doesn't get past the high of the three candles involved in that fair value gap. Let me explain what I mean with charts. So we all know this is what a fair value gap looks like. This is what a fair value gap looks like. And then these two we have wicks, something like this, something like this, the wick, and this. So yes. So after this, what we have is this space in between. What I mean is that this high right here can be formed inside here, or you can even get past it. But as long as it doesn't break this high, as long as this high doesn't break the high of the first candle of the fair value gap, if the first candle of the fair value gap is not the longest among them, let's say the wick of this second candle got past it, That means this high, if it doesn't get past the wick of that second candle, then it's valid. That means the high was formed inside this fair value gap. That's what I mean. And once that high is formed inside the fair value gap, price is coming back to sweep it. It might not be immediately, but later on, price is coming back to sweep it. And that is the liquidity grabs we are trading. I've been backtesting it for the past few months and I came up with an absolute banger results. I just showed you now on GBP USD and gold and even Euro USD, and you guys could see for yourselves. Now, the science behind it is that when market makers leave on fair value gaps and then come back to fill it, they definitely know that they have engineered some people who trades off fair value gaps. They have engineered some entries at that point. So they are coming back to sweep it. Once they sweep it, we now wait for a market structure shift. Normal, I have I had a friend who his own pattern of trading is once he identifies his liquidity, and those are the points we'll label temporary lows or temporary highs, which are these liquidities that are formed inside fair value gaps. We label them temporary lows, temporary highs. What he will just do is he will place his entry the above that liquidity, maybe a limit. You just place it few pips above that liquidity, and then you stop loss, just few pips stop loss, and then target the next high that formed inside the fair value gap. He didn't tell me. I was just seeing his charts. I asked him about it. He didn't want to tell me about it, so I decided to work on it. And when I figured this out, I checked his charts and found out that it was almost the same thing. But I don't want us to trade it that way. I want us to use market structure shifts, and that should be on the 2 minute time frame. If your liquidity is on 4 hours, maybe you could use 5 minutes time frame structure shift, or if it's on one on daily, you could use 15 minutes. But 15 minutes liquidity sweep and up to 1 hour, you can just use the 2 minutes time frame entry. Beware that you are going to get losses, but it's going to be very very minimal. Like let's say out of 10, you might lose 3 or 4, unlike before. Out of 10, you will lose 5, make 5, or maybe you even lose 6, and then maybe you lose 3 in a row, and then you start losing your morale in the trading. It's not like this because these are valid liquidities that are swept, and price must definitely react after sweeping them. So, without much further ado, let's just go into the charts and I'll start showing you. So, I'll go back to this. So, this is the first one. This one right here. It was on the 15-minute time frame. 15 minutes. So, the first thing I noticed was this low right here. Sorry, not this one. This one is also valid. Price have just swept it, but it's now current market this thing. So you can check it out tomorrow or within the week. I'm not saying you should trade it. You should back test first and forward test before you jump into the trade. So that's what I mean. So this right here was the first low I noticed. So when I noticed it, what I did first was to find out my fair value gap, and it was this fair value gap right here, and that was where price came into and formed this low. Although the low filled the fair value gap completely, but this low didn't get past the first candle of this fair value gap right here. So it was valid. And what did price do next? It swept it. This entry was on 2 minutes time frame. If I should go down to 2 minutes time frame, you will see the market structure shift. But I really don't want this to be very, very long. I might not be going down to 2 minutes on all of them, so everyone could see. But I went down to 2 minutes time frame, and even on that 15 minutes, you could clearly see the market structure shift. So this was a market structure shift. It was actually here inducement, and then rejection block for me, entry, stop loss, and everything was just as predicted. This was the first one. I still had losses too, and most of them I deleted it because I don't even know why I deleted it, and that was just price rallying up. And I think I was actually targeting for this entire liquidities to be swept or something like that. Or was it? I think it was this equal high. This was a triple top. Yes, I was targeting this triple top to be cleared, but and that was where I placed my take profits, and everything was just as it is. So that was the first one. I'll go back. I'll keep going back to all of them. So you keep seeing it as it played out. So the second one right here, I'll take it out right here. Okay. So the first thing I'll check is where this high was formed right here. You can clearly see that it was inside this fair value gap right here. That was where this high was formed. And what happened next? Price came and swept it. Let me go down to 15 minutes so you see it much more clearly. Price came down, came up here and swept this high right here. And after sweeping it, I got my entry on the 2 minutes time frame. On the 2 minutes time frame, market structure shifts, and then the entry at this other block. The entry at this other block, and it was a 1 to 9, almost. I think it even got to 1 to 10, probably. Yes, 1 to 10 weeks to reward. Just entry at this other block after the market structure shift right here, entry, and then I was just watching it play out, and that was it. That was the second one. Keep going. I think this was the one we checked now, right? Yes, this one. So the next one is now this right here. First, so you could argue. You could argue, okay, from this first one, this was a 1 to 6.5, and I don't think if a trade have run 1 to 6.5 that I will consider it failed. No, it's a win for me because I normally like taking my profit at 1 to 4, 1 to 5, 1 to 6. So this was a 1 to 6, and it was valid, but I'm coming to it. Let me deal with this one first. So what happened here first was that this was the high I was looking at. And why? Because this was a fair value gap right here, right here. And price filled this fair value gap, even though it filled it completely. Sorry, it filled it completely, yes, but it didn't get past the high of the first candle of that fair value gap. So I knew that this was an obvious liquidity for me. So when I was getting my entry, it first gave me the first market structure shift here, but it failed. That's normal. Market can fail. It failed, and I will consider this a loss. The first entry there, at least I didn't delete it. As you can see, this was the entry right here. It failed, and it gave me another one on that 2 minutes time frame. Another one, another market structure shift right here. Market structure shift, and then I entered up the other block, and everything, as they say, this was the first market structure shift right here. It broke this low and then came back, just gave a little reaction, and then fell, continued up before giving the second one. And this was around 10:30 after London Q zone. So I just decided to try it. It then came back after this towards New York Open, then gave out this reaction. And at New York Q zone, that's 144, that should be 8:44 a.m. New York, it just mitigated and dropped, which was a very, very valid trade for me. And even if I took a loss right here, this covered it. Like, as you can see, there's no need for me to start preaching about it because you can clearly see it right here. I wanted to check this one out even though this high was grabbed, but I didn't because this one was not inside the fair value gap. The high right here that this grabbed was not inside the fair value gap, so I left it. Had it been this high, came into this fair value gap and price grabbed it, I would have looked for entry. Same thing happened here, so I'll cut it out. I'll just keep doing this like this so you guys understand what I'm doing. So first thing first, this was the fair value gap and this high was formed inside this fair value gap. I'll take this and put it here inside this fair value gap. So it was a valid liquidity for me. And as you can see, one, two, three, four, five, six, seven equal highs, 7 hours of consolidation built a lot of liquidities around that zone. 7 hours of liquidity built a lot um, of consolidation, sorry, built a lot of liquidity around this zone and price just took it out. And when it took it out, still the 2 minutes time frame, and you can clearly see it. I use there's something called shadow codes. I don't know if you guys have learnt it. Shadow codes, and I like my stop loss to be 5 pips or something. Shadow codes entry model. If you guys don't know about it, I might share you guys the book, the shadow code books. It's called Shadow Codes by Hansi. I read that book a long time ago. This is one of his entry model. It's called XT1. Shadow Code ST1. This right here is called the ST1 model. That was what I used. Maybe I will share the book so you guys can read and understand what I'm saying. It's just the book is basically about supply and demand, QM and all those stuff. So it's nothing new, and price tapped in and came here before going back up. So this was a 1 to 6.5, 5 pip stop loss, 6.5. That should be around 30 something pips take profit. I think, yeah, 32.6 pips take profit. So it's a valid win for me, and I don't know for you. The same thing. Okay, this was where we stopped. This was the next liquidity. Sorry, this one right here, because we've actually done this. This one right here was the next liquidity. The high was formed inside this fair value gap, but it was not swept. Instead, this came and formed equal highs. So I left it because price didn't sweep it. I left it and I didn't trade it. So which other one? This one here is, it's very clear. This is very very clear. Let me take it out here. So this was it, and this was the one to 10.65 weeks to reward. This high was inside this fair value gap. This fair value gap right here. This is where this high formed, and what happened next? Price came and swept it. Immediately, price swept it. I went down to 2 minutes time frame. You could use 3 minutes if you don't have 2 minutes on your trading view. It's not a must that it must be 2 minutes. You could use 2 minutes time frame. So although it was choppy, but there was a clear market structure shift. After price swept it, it broke this low right here. This was a valid market structure shift for me. If you can't see it clearly, always remember to use your line charts. As you can clearly see, this was a market structure shift. I think even here, but this was the market structure shift for me, and price came back, tapped in. I, I got in, and that was it. Like that simple tweak in the entry model was everything for me, because once that high is formed inside a fair value gap, it makes it easier to spot and also easier to take. And that was it. Price just did its thing, and it was it. And then for this one, yeah, this one failed. It failed completely, because after price, this was the first week out. After price grabbed this liquidity inside the fair value gap, it gave the market structure shift, but it gave a market structure shift right here. But then coming back, it failed and then kept consolidating. gave another market structure shift here, and then it fell. But it then swept this third high, which was still inside this fair value gap. I think yes, which was still inside this fair value gap. But then it didn't. It gave a market structure shift. I was no longer interested in taking the trade because it has already failed twice. I was no longer interested in it. Let me just cut it out here and go down to 2 minutes. After this third sweep here, swept it, and then still gave market structure shifts thing. There's one here, there's another one here. After that, price came back. If you are going to take this trade, I think it even missed the other block. It missed this. These are the entire other blocks right here. It missed it, and then it dropped, which was okay. I wasn't even taking it the third time, but it's still the same thing. It's still like the same thing I've been explaining. A high inside fair value gap, a sweep, market structure shift, entry, and let it go. Same thing here. This one actually even happened twice, I think. Yes, twice. Because this was the first high that was inside this fair value gap. Price swept it, gave a market structure shift, and then I got in. I got in on the trade, and it just went down. And I think on the 15 minutes or so, I can't remember the high I marked out. Let me check it out. Be on the 15 minutes or so, the 1 hour. Sorry. Okay, I think it was this high. Can't really remember. To be frankly sincere, I can't recall. Was it this? Okay, I think it was this because this formed inside this fair value gap, and then I marked it out like this, and then price swept it again and gave a market structure shift. It was on 2 minutes time frame, and I don't want to go down to 2 minutes. And then I just got in here stop loss above the high, and then continued exactly the same thing, and it's it did the same thing others have been doing. Of course, played out. This was a 1 to 18 and a 1 to, sorry, yeah, a 1 to 18 and a 1 to 12. The same thing here. This high inside this. Sorry, who is raising his hands? Okay, sorry guys. Okay, ask. Other block on 2 minutes. Just the other block on the 2 minutes time frame. Everything, the entire candle, both the wicks included. Because if you refine it, one thing I observed, if you refine it too much, there's every tendency that price is going to miss your entry. It's going to miss your either your limit, or it might not get to the other blocks you want to sell or buy from. So I decided to include everything at all. So always include everything, else you miss the trade. That's the fact. That's the fact. So that was the same thing. Yeah. So we just finished these two, and we are now here. The same thing happened here inside this fair value gap. This high was inside this fair value gap. It filled the fair value gap, but then left liquidity. So price came back, swept it, gave a market structure shift, and this was the entry. As you can see, it's very very clear. Same thing here. This was actually the fair value gap I was looking at. This one here. Now most of you will be wondering and asking, but this filled this fair value gap completely and left it. Yes, but these were the candles involved in this fair value gap. First one, the second one, and the third one. And as long as this high didn't get past this first candle right here, so it's very, very valid. And it left one, two, three, triple top, which was another confluence for liquidity. So price came back here, swept it, and then gave market structure shift on the 2 minutes time frame. And I got in. The same thing played out. Exactly the same thing here. This was a double bottom actually, but then it formed inside this fair value gap. Price swept it, gave market structure shift, and I got in. This was a 1 to 5. Same thing happened here. This was actually the liquidity I was looking at. Price, let me cut it out right here. Let me cut it out. Okay, let me put it here. Yes, here. So I want you to understand that I wasn't making magics here. Everything was me following the same rule as I've just explained. This was the low right here. As you can see, I marked it out, and this was the fair value gap it formed in, and price swept it. After price swept it, I went down to 2 minutes time frame, and there was a clear market structure shift right here. This was the other block I used. What's it called? QM pattern for this entry. If you can't see it clearly, you check your line chart. This was the QM pattern. I used the QM for this entry, which included this other block because I didn't want to take this entire other block. So I just took it from this last low right here before this one and then this up move. And this was the market structure. Or you could even take this one, you see shifted right here and then price tapped back into it. This was a 1 to 6 with a 5 pip stop loss because I was always using anything less than 5 pip stop loss. I wasn't taking the trade, so I was always using 5 pip stop loss for this, and it went 30 pips because this is a 1 to 6, 1 to 6.3. That should be around 31.5 pips. So when price went 30 pips and then came back down, and price came back down, and then at least for me, I know I would have been out of this trade already because, like I said before, I take my profit at 1 to 5 or 1 to 6 at most. So when price came back and took this out, I had this other um low right here which I just marked, and it formed right inside this. This is the first candle, second candle, third candle, and this is the fair value gap. This is the fair value gap here. This is where this low formed inside. This one right here formed inside it, and price didn't get past the first candle of this fair value gap. So I marked it out. Price took it out, and then it gave a market structure shift, but it didn't come back for it. As you can see, this was the zone I wanted to buy from. It didn't come back into it, so I left it. So the same thing happened here. I think here. That was the low I was looking at. This one. Let me go back to 1 hour. See why we took it. Why I took it. Okay. So the same thing here. This was a 1 to 5.9 before it was taken out 5.9. So I still considered it a win because I always told you guys, a 1 to 3 or a 1 to 4, it's okay. So this was a 1.59, almost 1 to 6. So I considered it a win. After price this out, took out this low, which formed inside this fair value gap. It gave a market structure shift on the 2 minutes time frame, and I got in. Although it wasn't that much, but the same rule, the same thing right here. This was a fair value gap, which although it's small, but still very valid. Fair value gap right here. Price tapped into it and left this liquidity. price came in here, swept it, and I got in a 1 to 6.6. Same thing here, and this was even equal lows, which added a confluence for the liquidity. It formed inside this fair value gap, as you can see, left, and then price came back and swept it, gave me entry 1 to 8. This one was the same thing right here. This was the low, although it's very way high up, but I don't care. It was the low, it was inside this fair value gap, price then swept it, gave me market structure shift, and I got in 1 to 11. The same thing here. This high was inside this fair value gap. Okay, this I think tapped me out before going down. Yes, this tapped me out before going down, but it's still the same thing. It tapped me out, as you can see. It hit stop loss right here. It hit the stop loss. Let me zoom it in so you see the wick that hit the stop loss. Did it? And please, the class will end soon. I think we have just about 15 minutes. So this was it. So was it here? I think it was here. I think that was my entry. Let me check. Let me check, please, guys. Don't be angry because this was the week out. This was what took liquidity right here. This week was what took liquidity. So I had to go to 2 minutes to find entry. Let me see. Okay, this was the other block. It didn't tap me out, and then the stop loss was of this side because it didn't get to this one. So this was the first order block I got in, which swept this liquidity before the drop. So I got in here, stop loss above the high. It didn't tap me out. It was a misunderstanding. Sorry, and I went for a 1 to, I think it was 1 to 7, which played out. Of course, if I pushed it down all the way here, it will be 1 to 8. Very simple. Same thing here. This high inside this fair value gap and price swept it. Market structure shift entry. Same thing, high inside this fair value gap right here. Price swept it. Market structure shift. I think this was where I started from. Even if we continue, you still continue to see this high right here was not inside a fair value gap. So it is not valid. But then this one, this tiny high right here, remember this is the 1 hour time frame. This one right here is inside the fair value gap and immediately price swept it, you should be looking for market structure shift. As you can see, it this tiny one right here, if it's my friend, he will just like he has spotted this, he will just place a limit somewhere here and then stop loss just few pips, and then you start targeting. This is a fair value gap, and this low right here formed inside the fair value gap. He will just target it, and that will be a 1 to 10. That's just how he trades. If it fails, it failed. And then after price took this one, I think there should be, let me check, there should definitely be a market structure shift right here before price went up. So let's check it on 2 minutes time frame. After it took this, I just spotted this one now. As you can see that I've not back tested this side. I told you guys I started from August. This is 27th of July. So this was the liquidity right here, and it formed inside this fair value gap. There's this tiny one here, and there's this one. But then we'll consider this one. It's very, very clear. Inside this fair value gap, and price came back and swept it. So if we get an entry, market structure shifts. Here you go. Valid market structure shift. We have other block here with liquidities here. Let's see if we get tapped in. Can choose it. You can choose everything here actually. If you don't want to mix it. If we get tapped in, then you could call the trade. If you don't, then just it. Okay. Didn't give entry. But at least you get what I mean. Although it didn't give the entry here, maybe all these ones. No, I don't consider this. This is just liquidity. built up here. And then price got into this other block. We get it. So it's just the same thing every time. The same thing every time. It didn't give entry, fine and good. Maybe if we had used 5 minutes, let me check 5 minutes. Okay, even on the 5 minutes, it still didn't give entry. So there's no need trying to force it. No entry. So it's just a missed trade. It's just the same thing. So I think I will stop it here. You can continue the back test if you like. If you guys like, you can continue the back test. This one was also inside this fair value gap. So it's a valid liquidity, and after price swept it, you should look for entry. You can put your this thing at a fixed RR, maybe 1 to 4, 1 to 5. It's okay, because I'm very, very sure this should be up to 30, 40 pips. So you can, this is actually 99 pips. So you can actually benefit off it. You can profit off it right here. This is the one I'm looking at. You can profit off it. But if you go down to 2 minutes, oh, we can go further than that. Sorry, no historical data. Let me go back to that point. I was trying to see if we get an entry at that point, but they say we can go. Let me try three. Let me try 3 minutes and see if we can go lower. Let me try 3 minutes here. Okay, 3 minutes worked. Mm, did we get an entry? This was a market structure shift. Other block. No entry. Price didn't give entry. But had it been it gave entry, we would have gotten in on the trade, and that would be it. And maybe for those of you that likes to enter off fair value gaps, maybe you could have entered off any of these fair value gaps. Like Kaios, I am very, very sure he would have caught this because he likes trading off fair value gaps. So those of you that trade off fair value gap after this market structure shift right here, maybe on 5 minutes. On the 5 minutes there was actually an entry. Let's see. Yeah, yeah. If it's up to 1 to 5, fine. If it's not, I'm just trying to show you guys. I'm not trying to force it. Show you guys how it works. Let me reduce this. Your entry here, stop loss at this low, that would be a 14 pip stop loss, and then go for this high. Maybe this fair value gap right here. That would be a 1 to 6. Let's see if it hits. That's if it hits actually. Let's make it faster. 15 minutes. Did it? Okay. It didn't. Came back and took us out. Maybe if it closed around this point at 1 to 5, that's okay. Let's continue. Let me check one last one. Just one last one. I think this one. There's a fair value gap here for this high. This is the fair value gap, and that's where this high formed. This one, and it didn't get past the first candle of this fair value gap, so it was valid. And after it was swept, there will probably be a market structure shift around this point. Then you can get in at the trade. Let me check. 3 minutes. Yes, there is market structure shifts. We take this fair value gap. I'm sorry, we take this other block. Although it's big, we take this one. And let's see. Yes, maybe you could even refine it to this QM right here. You still tapped in to the QM right here. This would be your entry, your stop, and then it's now up to you wherever you want to target. I mean, where's the last one? Here's the last high that was formed inside the fair value gap. This one, I think that should be, because this one is not inside the fair value gap. Neither is this one in a fair value gap because this was completely filled. This is a fair value gap and there is no load here. So the last load inside the fair value gap is this one, and that should be your target 1 to 34 if it plays out. And the rest is history. So, guys, any question? That should be the end. Any question? Do we have a question? I think for starting, you should stick to 1 to 3 or 1 to 4, and 1 to 4 is actually okay, not too big, not too small. I think 1 to 4, just stick to 1 to 4. If it's 5 pips, you go for 20 pips take profit. 10 pips, you get for 40 pips take profit. If it's 15 pips, you go for that should be 60 pips. If it's 8 pips, you go for 32 pips. Just 8 pips stop loss, 32 pips take profit, just like that. 1 to 4, it's okay. It's actually more than okay for start. Maybe with time, when you gain your confidence, like you've now trusted the strategy, you've mastered everything about it, you can call it and everything, then you could go for 1 to 5, 6, 7, 8, 10. Of course, you guys saw most of them ran up to 1 to 20, 18, 12, 10, and all those stuff. But then the other ones that ran 1 to 6, 1 to 5 before coming back down, if you were holding it 1 to 10, you would have actually hit your break even or something like that. So that's why I say 1 to 4 is okay, 1 to 5 is okay. All right. Next question, please. Any other question? Please, if there's a question you ask now, because I might not be able to answer you later, because from tomorrow I have a lot of things to do, like a lot. I have my seminar defense in school. These 2 weeks that is coming, I might be very very busy. So that's why I'm asking. If you have a question, please ask me now. The strategy is very very simple and forward. I recorded the class. I'm going to drop the video after this, so you can go over it again and again. Maybe if you have a question, you can drop it on my DM. Inside my DM, anytime I come back from school, I will check and then I will answer you. So if there is no other question, I would just say, all right, thank you guys for joining, and let's see next time. Yeah, but if you want to use multiple time frames for your entry, I would suggest you stick to one time frame. Maybe if you don't see it clearly on 2 minutes, you check 3. If you don't see it clearly on 3 minutes, check 5 minutes. But just be very much assured that before 5 minutes time frame will give you a market structure shift. Maybe those who are using 2 minutes must have already gotten into the trade. And there's every likeliness that on the 5 minutes you might miss the trades, and those who are on the 2 minutes will get it because, of course, I don't need to explain why. You know how the market moves. So that's it. If you want to use multiple, no problem, but I would suggest you stick to one and let that one be the one. And I forgot to mention, please, when you're marking out liquidity highs and lows that form inside fair value gap. Don't go below 15 minutes time frame. From 15 minutes, 1 hour, 2 hours, 3 hours, 4 hours. You could even use daily or weekly charts. All of them are the same as long as it's inside the fair value gap. And also trade with the trend if you like, unless the counter trend is very clear. But for now, you could stick with trends. And thank you guys. The class is about to end. Thank you.